This is a very dangerous bearish reversal pattern. As we can see here, the S&P 500 and many other stocks are showing signs of weakness today, and this could culminate in a sharper correction ahead. There are exceptions, yes, and we're gonna talk about them, so let's take a look at the main key points to watch out from now on, our next targets, our next support levels, etc. But first, welcome to the Finance Hydra channel. My name is Nathan, trader, Brazilian spy, and founder of the 5% project. If you want some extra income and consistent profits in this market, well, come and trade with us. Avoid the classic pitfalls that cause 95% of traders to fail. So click on the link right here, right now, and find out more about our services. And of course, the QR code is right here on the left corner of your screen, all right? So let's start our analysis over here. Well, SPY is materializing a classic bearish chart structure. This movement over here is a lower high, lower low. We did a top level lower than the previous top level around the all-time high, and right now we are making a new bottom level lower than the previous bottom level over here. So this is a classic bearish pivot point. And why is this so problematic? For many reasons. First, just as a bull trend is made of higher highs, higher lows, bear trends are made of lower highs, lower lows, all right? So seeing SPY materializing such bearish chart structure right below this triple top chart pattern over here, well, this is a quite problematic reaction. You and I, we gotta agree with that, okay? This is not a good reaction for SPY. In addition to this, well, we see SPY losing the 21 MA on the daily chart, and this is the first bearish pivot point, and this is the first time we see SPY losing the 21 MA since SPY started its rally over here in October last year. So yes, we see a very problematic bearish reaction over here, suggesting a sharper correction. Nathan, what's the next technical support level for SPY? I'm gonna tell you guys in a minute. Right now, QQQ, if you ask me, the only thing that gives me hope in this market, hope that it is going to remain bullish, of course, because if it turns bearish, there is not a problem. We can go bearish as well, we can short, etc. But the only thing that could save the market from a sharper correction relies on QQQ, because QQQ is not bearish yet. Tech stocks aren't bearish yet. I know we are making a very problematic bearish reaction today. We are rejecting yesterday's bullish reaction, all right? This is a quite dangerous price action over here, but as long as QQQ stays above 434, well, this is not gonna trigger any meaningful bearish reversal chart structure. What's more, QQQ is still trading inside this massive bearish candlestick pattern over here from last Thursday. This candlestick pattern over here, which by the way, SPY is losing last Thursday's low over here, all right? We are still trading inside this candle over here, so it feels like we are still inside a congestion. All right, it is still a sideways correction, and as long as we don't see any crystal clear breakout, regardless if this breakout is going to occur, it is going to be downwards or upwards, well, we are not going to see anything new over here. And how this is going to affect our dear stocks? Well, some of our stocks are crystal clear bearish, like Tesla, for instance. Tesla is very bearish. If you ask me, we are on the verge of materializing a head and shoulders chart pattern, all right? We found a resistance level right under the 175 near the 21 EMA, the exponential moving average on the daily chart as well. So this is a dual resistance level. It is not gonna be easy for Tesla to break such important resistance level over here, especially if we see the indices losing momentum, losing their bullish momentum. So we are not going to see any meaningful bullish reverse over here so soon, as long as the indices maintain their bearish bias. As long as they still look weak, Tesla will probably look very weak as well. What can make things even more complicated over here? Well, we have earnings in 11 days. So probably the volatility will increase a lot over here. So we gotta watch out because Tesla is going to report earnings on March 24, all right? So this is gonna be a very volatile situation. The volatility will increase a lot on Tesla. But guys, as long as we don't reject this head and shoulders chart structure by breaking the previous top level and closing above it, and as long as we don't trigger this head and shoulders as well by losing the 164 support level, nothing new is going to materialize over here, all right? Right now, if you ask me, I am skeptical, and I don't like this price action too much. I'm gonna be honest with you guys. I see dozens of other stocks that are looking way better than Tesla right now. So if you ask me, I will maintain my neutrality at least until earnings, all right? After earnings, we'll see what's going to happen, all right? But right now, I will just maintain my neutrality. Unlike Nvidia is trying very hard to maintain the bullish bias. Of course, today's reaction is a real punch in the stomach, all right? Because we are making a very annoying bearish reaction right after Nvidia triggered this bullish candlestick pattern. Call it piercing line candlestick pattern, which is a bullish reversal pattern. I forgot the specific statistics, but I believe it reverses the trend 66% of the time. I don't remember, I'm so sorry, but a piercing line candlestick pattern is a statistically reliable candlestick pattern to work with, and we did trigger this pattern. We broke the 21 EMA on the daily chart, and right now we see this bearish reaction. On the bright side, we are not losing yesterday's low yet, and what's even better, we are not losing the 841 yet as well. But guys, if we do lose 841, there is no hope for it. Probably we're gonna materialize a sharper pullback on Nvidia as well. And how far a pullback could take us over here? If we take a look at the weekly chart, if you ask me, the 21 EMA on the weekly chart is a quite plausible target to work with, all right? Now, if you are a swing trader like me, well, then I advise selling your position, waiting for another bullish reaction near our next support level when the risk-reward ratio gets more attractive again. Because a pullback to the 21 EMA on the weekly chart, as harmless as this sounds, well, it is quite a drop, right? We are talking about a 16% drop over here, so it is very annoying. It is not for swing traders right now. It is not gonna be for swing traders because we're gonna lose a very important support level on the daily chart, the support level of this congestion, all right? So it will be a quite problematic scenario if this chart structure materialize on Nvidia, all right? Now, Nathan, could we go short on it? Well, maybe if the risk-reward ratio makes sense, okay, we could, but right now, I don't see any meaningful top signal. I don't see any meaningful bearish chart structure on Nvidia. Now, SPY. Nathan, how far a pullback on the broad market on SPY could take us over here? Well, if we take a look at the weekly chart, let me erase some of these studies over here. On the weekly chart, last week we did a bearish candlestick pattern, all right? This pattern has a name. It is a hanging man candlestick pattern, all right? Which, statistically speaking, it is a bullish continuation pattern 60% of the time. But it is at the same time a bearish engulfing candlestick pattern, which is a bearish reversal chart structure. So right now, if you ask me, we are reinforcing a bearish thesis on the weekly chart. We are losing last week's low. We are losing this bearish engulfing low. We are losing this hanging man's low. It doesn't matter the name you want to give to this candlestick pattern. We are losing last week's low, which was already a bearish week over here. So if you ask me, SPY wants to materialize a sharper correction to its own 21 EMA on the weekly chart QQQ. If QQQ loses the support level, the 21 EMA on the daily chart, on the weekly chart is going to be our next technical support level and our next technical target. In this scenario, we can work with short positions, all right? This is what I will probably recommend to the members of our Telegram channel. Remember, join the top 5% of traders. The link is in the fixed comment below. But as long as we don't see QQQ losing the 434, it is going to be very difficult to go full on short positions, all right? Because we see SPY making a top signal, yes, but tech stocks aren't just yet. If we take a look at the heat map over here, for instance, on this heat map, we see that SPY avoided a sharper correction because few stocks went up, alright? And they went up a lot. Apple, Google, Nvidia, Amazon, Costco, Nike, these companies, they are performing very well and they are huge companies. This is the only reason why SPY is not dropping that much. But if we take a look at the Nasdaq 100 over here, well, they're mostly on green, all right? We don't see any alarming signal over here. It feels like the market is just fine over here if we look only at the Nasdaq index. Right now, the S&P, which has a lot of companies in the finance sector, health tech sector, health services, process industries, etc. Well, these industries are suffering a lot over here. So these mixed signals, they make the situation very complicated right now. However, individual stocks are performing quite well. I believe we see many interesting signals among the Magnificent Seven, among other stocks over here. And by the way, I mentioned Nike. Allow me to share a curiosity about myself. For some reason, guys, you gotta keep in mind that traders, every single professional trader will have its own trading approach, all right? And our trading approaches are different from each other, all right? And for some reason, my personal trading approach is very accurate when we trade the Magnificent Seven stocks, bank stocks. For some reason, we never ever missed a trade on bank stocks. I don't know why. 100% accuracy, okay? We never miss it. But if you ask me, Nathan, is there any stock out there that you can't trade? Yes, Nike. This one over here. For some reason, I have 100% of inaccuracy. I miss every single trade on Nike. For some reason, I don't know why, but I'm not gonna insist too much on it, okay? So, yes, Nike. There are other few stocks out there which we don't trade at all, but Nike is a shame because I do like this company, right? It is a shame that I can't trade it properly, okay? It is a real shame, but well, right now we see, so to sum up, mixed signals. These are the most important support levels. These are our next technical targets. If you ask me, Nvidia is the best stock among the Magnificent Seven that can actually continue the bullish sentiment over here, or at least not drop that much if we see a real reversal on the QQQ, while Tesla is the weakest one. By triggering this head and shoulders chart pattern, its next technical support level is going to be around 152. Okay, so we gotta watch out these key points, these pivot points, the next targets, the next support levels. And of course, I'm gonna keep you guys updated every single day on this channel. So consider subscribing, click the like button. Next week, let's see what's going to happen over here. Thank you very much for your audience, my dear friends. Stay safe. Farewell.